Hey everyone, me Kevin here, coming to you from, well, an airport in Amsterdam, which you know what that means. The market's probably red, and well, it is. This is why we have a coupon code at meetkevin.com called Vacation Red that's going to expire pretty soon. but anyway, let's actually focus on what's really going on because I think I'm getting to the bottom of this. And I've been studying a lot, just sort of in travel, what other hedgies or suits or even non-suits, retail, whatever, are thinking about the market. And I think the explanation for the market in terms of what's happening is actually a lot simpler than what people are arguing. And so that's what I'd like to discuss in this video, in addition to what JD Vance said on the Joe Rogan podcast, because I think that gives us a little bit of color into what's going on in Iran, which also aids our commentary on oil and treasuries, which is equally important to, well, the broader market and CapEx funding, because CapEx is being funded by debt. And as treasuries go up, the cost of debt goes up, and therefore the cost of buying chips goes up, and you kind of squeeze all that, right? Like the squeeze we saw at IBM that we talked about was really this prioritization of spending, because yes, there is limited access to capital, or at least limited access to cheap capital. It is getting more expensive to raise money. Which is fine. I mean, treasury rates are higher. It is what it is. You know, for example, House Hack, and I always like to use us as an example. It's not a pitch. We're not fundraising, or House Hack's not trying to sell you anything right now. But I try to use it as an example because we sort of look at the market and go, okay, wow, well, there's, studying the market, and then there's what are we doing as a business. And I remember last year, wow, we're switching from buying more GPUs to buying more CPUs, and then we're telling course members, we're like, hey, this could be really good for AMD. And AMD skyrockets from like the 170 range to, the 500s now. And, then we also realized just in the last weeks, we're like, wow, the value of our GPUs has doubled. Those are paper gains, but whatever. Those were back when we were buying a lot of GPUs earlier last year for our proprietary models. One of the things we're seeing now is that when it's time to raise money, which we think, usually we buy real estate in a third, and trust me, this isn't all about House Hack. We're going to talk about the market and what I think is happening in just a moment. But I think it relates, and that's why I'm not trying to bore you. I'm trying to give you this insight from our point of view. In the third and fourth quarter, we usually go buy real estate. We usually go buy real estate. Let me clarify how I'm saying that. And we've done that every single year since we started the company and first said we're going to go buy real estate Q3, Q4 of 23. We did it then, did it in 24, did it in 25. We'll do it again this year. That's when we think we can find the best deals. And so we're thinking, like, do we fundraise, going into Q3, Q4, that latter back to school portion? And if we do, we probably fundraise at a higher, well, not only valuation, but higher yield than what we did before, just because the cost of capital has gone up. Now, fortunately, we can sustain that. We can pay that, right? Well, we're making more money than we ever have before, which is great, partly because of the AI products that we do sell. But the point is, companies, to some extent, are having to make decisions. They're having to say, okay, there's less money. The money that we are raising is more expensive. And, let's make some more strategic choices. And I think IBM is an example of that. Now, what that highlights isn't well seen on its own, the IBM situation or what I just described. You have to combine it with what Mark Zuckerberg said. And a lot of people, I think, are misconstruing what Mark Zuckerberg said. Because Mark Zuck, in a private meeting, talked about how, hey, we're looking at potentially selling this extra CapEx or this extra compute that we have. And then he later followed up and clarified that, hey, but the reason we're looking at selling that extra compute isn't necessarily because we overbuilt. It's actually because people are willing to throw so much money at our compute just to get access to our compute so that they can operate their proprietary AI models or whatever it is that they're doing. And so Mark is really trying to signal to markets, look, we're going to be a little bit more opportunistic in how we can make money. Now, there are two ways to read that. One way to read that is, okay, Meta is an AI play, it's an advertising play, and it's a compute play. I personally only care about it from the point of view of how AI makes advertising better, which I think is massive, and I only like it from the advertising point of view, but whatever. Some people say that, and they're like, oh, this is so bullish, great opportunity to monetize at high valuations, whatever, or high prices for compute. Other people look and say, no, this is a sign that they're regretting some of the overbuilding that they've done. Of course, then a week later, they're like, we're going to do another facility in Canada. So you get a lot of narratives that play to both sides. What I think is probably true is that there's a mix of a little bit of both going on. Mark Zuckerberg himself has argued that they've fallen behind sort of on the LLM race. They acknowledge that. And in addition to sort of falling behind on that LLM race, they realize that they need to be opportunistic about how they make money, so that way their stock doesn't keep tanking. Because if their stock keeps tanking and people keep bailing on the stock, then guess what happens? It becomes even harder to raise money for the initiatives that you do think are profitable. Now, I think Meta has been brilliant in how they've arranged a lot of their leases. I think it's a little shady how they arrange a lot of them off balance sheet, but the cancellation clauses that they have in them, I think, are great. And they're going to leave a lot of bag holders in the companies who are providing these sort of leased compute services. But if they can pick up dollars, great. But now you have to combine this uncertainty with what's going on with Meta with the IBM news, which some are like, oh, that's bullish hardware. But then others are like, but then look at the Meta news. Okay, combine both of those things with the suckening. Remember, we've talked about a suckening for 4 weeks. We have said on a consistent basis since before the SpaceX IPO, this sucker is going to meme and then it'll bleed. I called for a 30% rise and then a bleed. And I'd like to also be very clear about the record. You know, people, well, first of all, somebody did like an AI analysis